He has now consented to serve as Tesla's CEO for the ensuing 10 years. Many had speculated that he would stand down within the next 2 or 3 years. He had hinted that he might leave the company, at least as CEO, once the Model 3 was completed and operating. But Tesla has just unveiled a revolutionary new compensation scheme. It might be the most unconventional compensation plan in recorded history. Pay can be directly correlated with the performance of the business. There is no guarantee that the executive will be compensated in any way or at any time. He receives no pay, equity, or cash bonus. He only receives equity that vests gradually and only provided he meets these absurd hurdle rates. Thus, the corporation is currently valued at $59 billion. They operate in $50 billion intervals. Therefore, you're merely talking about market capitalization if he grows the company to $100 billion. It has nothing to do with revenue or output volume. At every stage, there will be 2 metrics. Thus, he must first grow the business to $100 billion and meet these operational adjusted EA and revenue targets. He receives nothing if he doesn't receive either of them. It's a bit of an odd breakdown depending on market capitalization. He can't control the market's irrationality at every $50 if he reaches $150 and needs to meet the operational targets. He receives 1% of the corporation for every $50 billion. Believe it or not, he would receive roughly $55 billion in pay if he could somehow magically grow the company to $650 billion, which is exactly what the plan calls for. He receives nothing at all otherwise. What happens if you raise it to $650 billion and it plummets to $500 billion right away? He must retain the shares for 5 years after they vest. You still get the rates correct for each rate, even though market capitalization is the most bizarre thing I've ever seen. It is impossible to rig the system because even if you were to raise the company's market capitalization to $100 billion, you would still need to meet the company's operational targets. It's a one-time deal where you must obtain both and retain the shares for 5 years. Have you spent the last few days working nonstop? You are not alone, I'm sure of it, but what if we told you that the man behind Tesla, the mastermind of Mars expeditions, is putting in countless hours of work, not for financial gain, but for something much more important? This film delves deeply into the enigma surrounding Elon's earnings and reveals the startling details of his revolutionary new compensation plan, which has the potential to drastically alter the game. We'll go into the world of the much-anticipated Roadster, examine the implications of a possible pay increase, and uncover the mysteries surrounding Elon's financial decisions. The stakes are higher than ever, so go with caution. The path ahead is full of turns and twists. So buckle up, fellow Tesla fans, because we're about to go on an exciting voyage into the unknown. There is a great deal of mystery, suspense, and intrigue around Elon Musk's salary, the Roadster resurgence, and Tesla's future. Please remember to like and subscribe to Tesla Stock News in order to show your support before we continue with this video. Now, let's get started. Talk about Elon Musk's pay, or rather, his lack of it, has been circulating. Tesla's founder and CEO, Elon Musk, does not currently receive compensation. His wealth is directly related to his Tesla holdings, which can range from 13.3% to 20%, based on whether his options are taken into account or just his shares. Elon Musk prospers when Tesla does. But now that he's achieved the peak, he has no more compensation targets to meet. As stated in a February 20, 2023 article, this has been the situation for about a year. Elon hasn't gotten a cash paycheck since 2019, when the minimum wage in California required him to get a meager $23,750. Furthermore, he realized 9 of the 10 possible option blocks before the 2012 options he was granted expired last year. It was revealed just last month that Musk had been awarded the final block of options as part of a more lucrative 2018 compensation package. Thus, Elon hasn't benefited financially from Tesla's performance over the past year. It's crucial to remember that Elon Musk owns an incredible 412 million Tesla shares, in addition to options to buy an additional 34 million at an exceptionally cheap price of $23.34 per share. It's interesting to note that at the time this article was published, Tesla's stock was selling at about $128 per share, which is not too dissimilar from its current value. Notably, Redbush Securities Dan Ives, who is frequently mentioned on this channel, said, "I would expect Musk to receive a sizable remuneration package." Tesla's pivotal figure, Musk is a key factor in the stock's premium price. I've stressed how crucial it is that the board reassure the market that Musk will remain Tesla's CEO for the foreseeable future. His observations highlight how important Elon is to Tesla's success, and the upcoming compensation package may strengthen his standing and reassure investors. Elon Musk is more than just a worker at Tesla. He is the company's inspiration. It is said that Musk would do better than any other Tesla CEO because there is currently no incentive compensation plan in place. It is suggested that you give him a big, bold objective, like building 10,000 bots and matching Saudi Aramco's market capitalization, along with a pledge to use the money raised to fund enormous projects that will advance artificial intelligence and automation and increase human presence in space through the deployment of more starships. This is about Elon Musk showcasing his potential with more money at his disposal, not about ostentatious houses or yachts. It begs the question, what has Elon hinted at, and what would he do with more money? Elon Musk has made it quite evident that were he leave Tesla today, the business will still succeed regardless of who leads it, himself or someone else. It is unlikely to have a major impact on the performance of the stock. It appears that at this time, keeping an air of grace and graciousness is more important to him than receiving money for making the right choices or moving the business forward. This circumstance may account for Elon Musk's recent, more gloomy comments during earnings calls. Unlike executives like Tim Cook at Apple, who have a talent for soothing investors even during difficult times, he has no desire to sugarcoat the company's performance. Apple maintains investor confidence despite seeing consecutive quarters of sales declines, and its stock is still close to all-time highs. Elon Musk, on the other hand, lacks such motivations. He expresses his opinions without hesitation. Nonetheless, Elon might benefit from a well-designed incentive plan. It might inspire him to move more quickly on the Roadster, the Cybertruck, and other projects, which could result in further advancement. This is not a unique viewpoint, conversations. Rumors regarding Elon's upcoming pay deal have been going around and picking up steam lately. Investors in Tesla stock may become quite excited when such a package becomes available, since Elon stands to gain significantly if Tesla becomes the most valuable company in the world or reaches a $2 trillion or $3 trillion market value. It offers motivation and a clear course of action. Notably, there is now hope for the Roadster, which was originally scheduled for release in 2020. According to reports, key technicians appear to have been training for the new Roadster, which may indicate that it will be available in early Q2. Although there isn't any hard data to support this, the possibility of the Roadster becoming available might be very beneficial for Tesla and its investors. After all, when the Roadster was originally revealed, Tesla took in $250 million in reservations alone. In a May 28, 2023 Twitter Space call, Elon Musk promised that the much-anticipated Roadster would finally arrive by the end of 2024. Thus, the future seems bright for Tesla and its fans as we move ahead. Given the Roadster's history of delays, it is now imperative to lower expectations. But if Tesla can release the Roadster as soon as possible, it might revolutionize the market for Tesla shares. The Tesla Roadster isn't your typical sports vehicle. Rather, it resembles a Lamborghini. It stands for the premium, upper-echelon sports car market, an area that Tesla hasn't yet entered. A dedicated sports vehicle would broaden Tesla's product offering, which now includes trucks, SUVs, and sedans, and appeal to a wider market. Furthermore, introducing a new product would revitalize Tesla's clientele, particularly one as thrilling as the Roadster. Even among those who cannot afford the Roadster, many Tesla customers have expressed a strong desire for something fresh and exciting. They have enjoyed driving the Model 3 and Model Y. The idea of a new product is alluring. In contrast to the Cybertruck's intricate construction, the Roadster ought to have robust profit margins and reasonably simple assembly. The Roadster's construction and design should make it more similar to the Model S in terms of assembly difficulty, which would enable Tesla to produce it in larger quantities. In other news, Elon Musk has regretfully acknowledged that it is doubtful that the Cybertruck would be offered in China because obtaining the necessary permits will be extremely difficult. There is a bright side, though, in that some prototypes might be sent over for exhibition. Concurrently, delivery dates are being sent to purchasers of Cybertruck Foundation Series all-wheel drive vehicles, and additional VINs are being assigned. Nor is Tesla's competitor going to back down. BMW sold 2.25 million automobiles globally in 2023, which presented a significant obstacle. Time will tell, but it's possible that Tesla's total sales in 2024 will exceed BMW's. A major announcement from Tesla regarding delivery projections for the entire year is anticipated in January. This might have a big effect on the price of Tesla's stock. In terms of performance, Tesla leads the field when looking at worldwide EV sales by company in 2023. China may have fallen behind BYD, but Tesla still leads with almost 300,000 EV sales. Even in China, Tesla vehicles have an average selling price of over $40,000, making it clear that they are a luxury brand. Finally, the debate about Elon Musk's salary deal is still ongoing. Some contend that Elon has continuously achieved the objectives set forth in his remuneration plan, and that his contributions have expedited Tesla's transition to environmentally friendly vehicles. From an amazing historical perspective, Elon Musk's remuneration package was revealed on January 23, 2018, the day when Tesla's market value was $59 billion. It was considered to be one of the boldest pay schemes ever. He made it clear that Elon would earn nothing if Tesla's value didn't nearly quadruple. Surprisingly, in just 3 years, Elon was able to secure the astounding equivalent of $55 billion for Tesla, as the company not only reached but exceeded a $650 billion market worth. An incredible trip for Tesla and Elon. Elon Musk declared in a recent video that he will stay on as Tesla's CEO for the ensuing 10 years. His possible departure within the next 2 to 3 years had been the subject of much speculation, particularly after he had alluded to it once the Model 3 project was up and running. But now, one of the most innovative compensation schemes in company history has been revealed by Tesla. Executive remuneration under this plan is totally dependent on the performance of the business. Wages, cash bonuses, or equity grants are not guaranteed. Elon Musk will instead get equity that vests gradually and is subject to exceedingly high hurdle rates. These hurdle rates are based on Tesla's market capitalization and are set in bold, incremental increments of $50 billion. This is how it works. Elon receives 1% of the company's equity for every $50 billion growth in market capitalization. The caveat is that in order to get these benefits, he must meet both operational and adjusted EBITDA and revenue targets. He gets nothing at each $50 billion milestone if he doesn't achieve any of these requirements. The requirement to hold the awarded shares for 5 years adds even more intrigue to this compensation arrangement, essentially putting one in an eat-what-you-kill situation. Elon's interests are fully in line with the long-term profitability of the company thanks to this strategy. Let's now turn our attention to the prognosis and current patterns for Tesla. A minor fall in interest in the whole Tesla portfolio, including a decline in searches for the Model 3, is evident in the data from Google Trends. Furthermore, there has been some variation in the Model Y's inventory figures, which defies the conventional wisdom that suggests increased demand is correlated with lower inventory. Despite having a lot of inventory, Model Y sales performed well in the fourth quarter of the previous year. On the other hand, stockpiles of the Model S, Model X, and Model 3 have been declining, with the Model 3 inventory reaching a 12-month low. Futures activity for the coming week shows a skew towards call options, indicating a generally optimistic attitude among traders. Furthermore, Tesla's stock is currently in oversold area, which has historically resulted in significant recoveries of more than 30%. The state of the overall market and Tesla's Q4 earnings call, which is set for January 24, will determine whether or not this trend continues. It's interesting to note that Tesla could unveil Elon Musk's new remuneration package during this earnings call. An announcement of this kind may boost investor confidence and give Elon a compelling reason to stay in charge. Given the pending lawsuits, unfavorable press coverage, and possible impact on stock performance, his resignation would put Tesla at serious risk. That's all I have to say for today. Although Tesla's internal dynamics have a substantial impact on its destiny, external market pressures also hold sway. These outside influences may have an effect on Tesla's stock performance. Before we go, remember to subscribe to Tesla Stock News and use the like button for more updates and analysis. We appreciate your time and interest, and we hope to bring you more fascinating Tesla news in the future.